Worst unemployment since the Great Depression. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at some articles from Yahoo Finance preparing us all for the worst unemployment since the Great Depression. Now, there's been a little change, a little difference in expectation. If we jump over here to trading economics, we can see the US unemployment rate dropped to 13.3%. So down from 14.7. We scroll down here, we can see the forecast. The consensus was 19.8 or 19.5 from trading economics. So it's definitely performed a lot better. So I thought we'd have a look at the article warning us about this and then another one discussing what's actually happened. Because with everything that's going on, I mean, this is older data. Everything that's going on in the United States, we'll have to see what happens next month. But there are businesses that are employing more logistics, pizza hiring companies, food delivery companies. We'll have to see what's going on. So get ready for the worst unemployment reading since the Great Depression. So the morning briefing yesterday. So later this morning, the world will receive more shocking data about the state of the US labor market. At 8:30 a.m. Eastern Time, the Bureau of Labor Statistics will publish the May jobs report. This report is expected to show the economy lost 7.5 million jobs last month, while the unemployment rate rose to 19.4%. At this level, the unemployment rate will be the highest since the Great Depression. And here you go. You can have the chart there showing from 1929 to 2020. So they haven't beaten the Great Depression. They haven't beaten it, but they're getting close to it, apparently. And as we head into the summer months and the reopening of state economies across the country continues, the headline unemployment rate will likely continue to draw the most interest from investors and the broader public as a sign of recovery or continued struggles in the US labor market. Well, the question we have to put forward to is, what methodology are they using to consider employment and unemployment? Over here in Australia, our unemployment rate should be much higher. The methodology is, you wouldn't consider what's considered employed full-term employment. You couldn't even afford to live off it. It's down to 1 hour. Unemployment rate is also very high in Australia. The combined unemployment underemployment rate using the Roy Morgan methodology is about 25% of our workforce. So we have to question the validity of the US claims. But the difference is, what's really significant here is the sharp difference, even with this methodology, is the sharp difference between what was predicted and what has actually occurred. What is that telling us? Are the forecasts of economic demise off, or is it just going to be delayed, or going to be even worse now with the riots and just all the destruction that's happening over there? But Wall Street economists are looking at other measures of the labor market for broader signs of where the job market stands as we progress through what financial markets are suggesting could be a strong economic rebound. Ellen Zenter and the economics team at Morgan Stanley said in a note this week that today's report will likely serve as the high water market for unemployment during this cycle. But Morgan Stanley thinks this unemployment rate actually understates the weakness we're seeing in the US labor market. Zenter and her team, for instance, write that if worker absent from work for other reasons had been counted among the unemployed, the official rate could hit as high as 22 in April and 25 in May. So they're doing the same thing that we have over here. The same thing that's happening over here, where the statistics aren't showing the true immensity of what's happening. And the firm is not alone on Wall Street in viewing the true unemployment rate as materially higher than what official data has said so far. UBS economist, led by Samuel Coffin, forecast a rise in the unemployment rate to 17.2% in May from 14.7% in April, but writes that even this data underestimates the damage. Many are counted as employed who are not at work, the firm adds. Had they been classified differently, the unemployment rate could easily have been 20% in April. In addition, the participation rate plummeted from 63.4% before the pandemic in February to 60.2% in April, and we forecast a slight further decline to 59.9% in May. The participation rate is an important gauge in coming months of the extent of lasting damage to the labour market. And yes, that is 100% right. Here in Australia too, you've heard it. You've heard our governor talk about wanting to limit the scarring for people. Once you get unemployed, jumping back into the market can become difficult. And that's why we're seeing in another article I looked at, more and more Australians are looking at buying jobs now. They're buying jobs. So they may be at a point they may have been made redundant and may not be able to get back into the market. Maybe they're too old. And they have to then create their own employment. And some of them may look at buying a business. Which, I mean, it's sensible. It's sensible if you're in that situation. You just have to be careful with what you buy. In addition to participation, economists also believe continuing claims for unemployment insurance bear close watching for understanding how well or how poorly the labour market's recovery is really going. As states continue to ease stay-at-home requirements, we expect the economy will transition from a surge in layoffs to re-employment, said Michael Gappin, an economist at Barclays, in a note to clients on Thursday. If so, the signal from continuing claims could become more relevant, since large-scale hiring would put unemployment rapidly lower even in the event that initial claims remained elevated. In other words, the flow into employment could overwhelm the flow out of employment if the country is able to emerge successfully from economic lockdown. On Thursday, the latest data on initial job loss claims showed continuing claims for unemployment insurance rose to 21.49 million from 20.84 million in the previous week. This increase was seen by economists as driven by a backlog of data coming in from California and Florida, which have bi-weekly initial claim filing instead of weekly. The team at Oxford Economics said in an email Thursday that when we excluded data from these two states, it appears continuing claims are moving down from their peaks, suggesting some rehiring is starting to take place. So while Friday might serve as a turning point of sorts for US labour market data, a true recovery is tenuous at this point in the cycle, and as we noted last week, data no longer getting worse is a long way from things looking good about the labour market. So let's jump now to after the data was released. Okay, so US unemployment unexpectedly drops in May. So they're mentioning hints at hiring happening again, but unemployment is down there. Beat all their forecasts by a huge amount. Remember, they were predicting over 19%, and it's at 13.3%. The US economy unexpectedly added jobs in May after suffering record losses in the prior month, offering the clearest signals yet that the downturn triggered by the pandemic was probably over, though the road to recovery could be long. The Labour Department's closely watched employment report on Friday also showed the jobless rate falling to 13.3% last month from 14.7% last in April, a post-World War II high. I mean, that's just those jobless figures, that percentage, over 10%, looks so high to an Australian here. But remember, I mean, this methodology is different. Still, it came on the heels of surveys showing consumer confidence, manufacturing, and service industries are stabilizing. We'll have to see where this goes next month with all this other disruptions that are happening in the States, if that's going to have an impact on employment, and it would have to. Economic conditions have significantly improved as businesses reopened after shuttering in mid-March to slow the spread of the pandemic. Non-farm payroll rose by 2.5 million jobs last month after a record plunge of 20.6 million in April. Economists polled by Reuters have forecast the unemployment rate jumping to 19.8% in May and payrolls falling by 8 million jobs. These improvements in the labour market reflect a limited resumption of economic activity that had been curtailed in March and April due to the pandemic and efforts to contain it, the Labour Department said in a statement. So there we have it, guys. Predictions of worst unemployment since the Great Depression and over 19%, and an outcome that was significantly better than forecasts or the consensus. What does that tell us? What do you think will happen with the next labour market results from the US and the implications that will have on the global economy and on us here in Australia? Definitely something to watch, and always to be a bit skeptical about some of these predictions that are coming from our economists. I just love the wage growth forecasts here from the RBA. Good as gold, mate. Good as gold. As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support the content we create here, there are a few ways you can. Simply commenting, liking, and sharing, getting the content out there. It all helps the channel grow. You can support us financially via joining the channel on YouTube or Patreon, using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin, buying our merch from HeiseSays, using gold parts from the Perth Mint, or supporting us via PayPal. Take care, guys. Have a great day, and I'll see you in the next episode.